Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Bruce McCain, Chief Investment Strategist for middle market bank Keybank, about the potential impacts of a Trump presidency, the advent of Brexit, and the near-term outlook for the U.S. and global economies.
Lots to talk about in terms of the post-election environment.
You think so?
I think so. Yeah. There's a lot, and not only post-election, but just around the world. There's so many interesting things going on at the same time that it's interesting to see how all the pieces are going to fall in. So I guess maybe starting with the Trump victory. You know, there's obviously a lot of uncertainty because of the nature of the campaign and a certain degree of opacity when it comes to Trump's real plans. But obviously the markets are rallying. Now that may or may not be because of Trump, but they're clearly rallying. And there seems to be an element of optimism in the business community anyway about expectations for what the Trump administration will do. What's your sort of take on it overall at the moment?
I think certainly there's been a lot of optimism generated. Probably the biggest question is whether or not the changes in Washington will live up to expectations and whether or not we can maintain this momentum, or whether in fact we'll sink back to the reality of an economy that has grown pretty consistently over the last few years, but at a disappointing rate. And I think that to some extent, part of the challenge for 2017 is that it takes time to make any change in Washington, even if change in profound change is coming. And so I think there are opportunities for the business community and for investors in general to become somewhat disappointed along the way, with hopefully then somewhat better results as we move into 2018 and have a chance to see what Washington can truly do for us.
Right. I mean, one would think, well, you know, the psychology of the Carrier and Ford things, and they're in many ways they're PR stunts. I'm happy for the workers whose jobs are staying here, but you know, in the grand scheme of things, I mean, that's not really a model for economic growth. I mean, these are pretty. These are, you know, the president can't go around
limited gain,
sort of
certainly within the overall the ongoing problem.
Yeah, I guess my sense is that it's more an act of symbolism than anything else. You know, in the sense that, you know, Trump is trying to show, okay, I'm serious about trying to keep jobs in the States, and I'll use whatever I can. But the broader point, though, it seems to me is, and this kind of touches on the timing of things. You know, when you look at the potential impacts of what Trump is suggesting, I kind of dump them into, you know, three major categories. I mean, there's obviously the tax side, both corporate and personal, but I mean, the corporate side being the more important, I think. There's the regulatory side, which I think is undervalued. I mean, when I
think that's probably the most important one too.
Yeah, I mean, I talk to middle market companies, and I also read all the surveys of middle market companies and all those things, and that's always way up there at the top of the list. You know, just the ability to do business, and then there's the trade side, which
the trade side.
I maybe throw in healthcare in there somewhere, but I think that's a little bit less important. But you know, so in terms of, you know, what you were speaking about, the speed to market, so to speak, of these changes, I would think regulatory change could happen a little more quickly than, I mean, certainly simplifying the tax code is going to be, and lowering corporate rates, that's going to be a brawl. I don't think there's any question about that. But what do you? I mean, am I
let's
wrong
take
on
each
that?
of those. No, I think that's, and maybe taking a look at how quickly and how much each could do is one of the better ways to gauge what the change in Washington might do for us economically. I do think that the best hope comes from the regulatory side, and I think it was not so much the fact that we were over-regulated in the sense that there were regulations in place that shouldn't have been there, but that we were regulated with a confusing mishmash of regulations from different agencies. In other words, the sheer volume of regulations was as much the problem as the amount of regulation in terms of the constraints on business, to the point that businesses talked about spending large amounts of money simply to find out what regulations they would be subject to, much less than the cost of trying to live within those regulations. So for that reason, to the extent that we get regulatory simplification, I think especially for small businesses, which have been the lifeblood of growth in the United States for a number of years, there is the potential for quite a bit of an advance in terms of profitability for those businesses as you take away some of the costs of what it takes to be able to operate and to expand, and also maybe therefore some improved productivity where we shift more of the dollars that are flowing within firms to producing goods and services that would be demanded within the marketplace, as opposed to simply studying out what moves we can make and not get ourselves into trouble from a legal standpoint. So, one of the things that you saw with the Reagan Revolution was a huge impact on growth because of cutting marginal tax rates from about 90% down to the 30s, I think, at that point. In a similar way, to the extent that we are excessively regulated by the flow of regulations that we put in place over the last 8 years, simply streamlining and simplifying the structure may provide a much bigger economic gain than we might think at this point. We're simply going to have to get into it and find out what that looks like.
Yeah, and you touched on... I'm sorry, go ahead, please. Go ahead.
No, let's finish this one, and then I'll shift to the next topic.
Okay, yeah, no, just a quick point on that. You touched on the fact that regulatory reform or streamline, whatever you want to call it, is going to really, you would think, most positively impact mid-sized companies. I guess I would say mid-sized companies would almost benefit from that better than anyone, because a lot of the much smaller companies, a lot of them are immune to a lot of the regulatory stuff, 25 people or less, that kind of thing. But it's the middle market guys who don't have the clout or the compliance departments that have to deal with all those things like the big guys do. The middle market's usually the one who's most exposed, and I'm very hopeful that if there is a streamlining, that's a lot of that's going to go to the middle market, it would seem to me. So anyway,
although bear in mind, even there at the lower level, as you say, 25 and less, you don't face the regulations. If we get rid of the 25 limit, then a lot of those small companies may become more mid-sized companies as you begin to take away the constraints that were artificially keeping them in that lower size range. Right. And we talk to a lot of clients who talk about that sort of calculus as they map out what to do with their companies. So I think you're right. The mid-sized companies by nature tend to be somewhat larger and therefore have a greater impact on the economy. But the ultimate invigoration of growth may in fact come as we find ways to allow some of the small companies to simply unleash growth that they're capable of making but have been artificially held back from making because of the regulatory structure we have in place. So
right. It's kind of like marginal income tax.
An open question is to just Yeah, it remains an open question as to just which companies will be most affected and how much they'll be able to grow. But I think it does represent one of the more positive upsides. And I think to some extent, as you listen to investors and businesses who've talked about it, they most often focus on the hope that they feel with respect to the regulatory issues more than what they expect on the spending side.
Right.
So. Right. With respect to the trade issues, I think you're right that doesn't represent as much upside. But there's one caveat to that. Part of it reflects the fact certainly that the trade issue is a worldwide issue, and I think effectively, at least on the manufacturing side, we're in a situation where virtually every country has significant excess manufacturing capacity. Even some of the emerging markets have gotten to the point. China is struggling with the fact that they can't simply grow by throwing up new plants and exporting more to Europe or to the United States the way they once did. And so we're going through this process of rationalizing what the productive landscape looks like on a global basis. I do think that the one place where there may be some gains for the United States, though, is that we have been relatively free, or relatively more free market oriented in the way that we put together our regulatory structures and the way that we've negotiated trade deals, sometimes much more so than other countries that have been willing to be more protectionist. Logically, when you talk to businesses about how you locate your productive facilities, more and more they're adopting a model where you try to make the goods that you sell as close to the end market as possible. To the extent that, as a country, we've allowed a lot of our productive resource base to be located overseas because of more competitive wage rates, and can argue for a little bit more of a level playing field in terms of bringing back some production for what will be consumed in the United States relative to what we have had. I think that there are some, maybe some potential for job gains at the margin, but I think, again, relatively, it's not going to be nearly as much as I think the voters probably expected when they put Mr. Trump into the office. And so there is some room for disappointment down the line. Now, whether we can offset that with education programs and other things that will help people to make a transition into other career options, we'll have to see. But I do think that for the most part, it's going to be a lot more smoke than fire when it comes to the issue of just how many manufacturing jobs we're going to be able to bring back to the United States.
Yeah. No, I guess that's my take on it too. I'm philosophically a free trader, and you know, my sense is that protectionism, you know, writ large is it's a sugar rush. You know, I mean, it may be great for the moment, you know, where you protect industries and all that stuff, but in the long run, you end up with the U.S. auto industry in the 70s. You know, if you're protected. Go ahead.
No, I think you're absolutely right about that. Although even there, to the extent that trade is a function of negotiations that affect both ways. To the extent that other countries have been more protectionist and we've allowed them to get away with that within the negotiations, to the extent that we come to the table with the threat of protectionism in the United States, not so much with the aim of really being protectionist and shielding inefficient industries within the United States, but more to forcing our trading partners around the world to be more open with respect to their own markets. The United States could get some gains when it comes to U.S. jobs solely in terms of the goods that we're able to export. increasing relative to what it would have been otherwise. So even there is some chance for gain. Again, I think that the odds are relatively lower than there would be on the regulatory front. But nonetheless, we'll just have to see how effectively and the newest administration is able to wield some of the power that it wants to take on in the trade area to see whether or not they can ultimately improve the balance of trade for the United States.
Right, and all this sort of in a context of, there's a churning going on internationally as well. When you think of Brexit, the other sort of pressures on the Eurozone, the TPP, looks like it's a dead letter at the moment anyway. The renegotiation of NAFTA. I mean, so it's the trade picture worldwide is in massive flux right now. So it is very difficult. You're right to see how that's all going to shake out, because there's a lot of moving parts at this point. So it'll be interesting. Well,
and I think, again, we need to keep in mind that it ultimately stems to the unalterable reality that we have the ability to produce a lot more in terms of manufactured goods than we have the world demand to support at this point. Over time, that will shift as the population of the world grows. It also should shift as you get a larger middle class in some of the developing countries of the world. But the third alternative is some consolidation and rationalization, taking out overlapping capacity and doing some of the mergers that we've seen in the United States and on a global basis as manufacturers try to shrink the base to make it a little bit more profitable in terms of operating it. So I think that we probably face a number of years where it's going to be difficult from a manufacturing standpoint, not only in terms of the job incumbents, but also in terms of the companies that are struggling to rationalize what they're doing.
Right. Yeah, it's interesting times. I guess on the tax front, I'm talking more corporate tax front. I mean, do you think that's going to have a huge impact? Or I mean, obviously we have to wait and see what's going to happen. But I believe he's talking about knocking the corporate tax rate to 15%. I think that's it. What it was. I mean, what are your thoughts on that?
Well, he suggested 15. The House proposal was 20. I think that in some ways there are some arguments for simplifying things, and to the extent that they're going to have to, at least I think the sentiment in Washington is that they're going to have to pay for that tax cut by getting rid of some exemptions or some deductions that have been used. I think the reality is that the winners and losers under the tax change will perhaps be more balanced than it might look up front. So from that standpoint, I don't think it's simply going to be tax cuts that would generate larger profits overall that ultimately would increase economic growth. I think it's more a matter of shifting the tax burden so that companies that currently have large deductions that allow them to pay no taxes will run the risk of having to pay at least something in taxes, while those that have not had a broad number of deductions and have paid the maximum tax rate should benefit. From that standpoint, arguably, it's economically probably a little bit more efficient than it's been, but I'm not sure that it changes the overall balance of profitability and therefore the balance of economic growth within the society as a whole. So the tax arguments and the tax changes that are likely going to come, I think people remember the Reagan tax cuts and what that did for the economy. This is going to be a very different animal.
Yeah, no, I agree. I mean, to me, the simplification and I guess I would argue the inefficiency, getting rid of the inefficiencies, as you had pointed out, in the system. I would argue that in itself is a net good in the sense that it's more transparent. It's just much more efficient, and particularly for foreign countries that want to, or companies that want to invest in the U.S. the opacity of our current system is such that, I imagine it's fairly daunting to them. So one would hope that the efficiency would help. Real quickly, what is your sense of the interest rate environment going forward? Obviously, we just had a bump. We're promised more. Do you think that's going to have a significant dampening effect on the economy, the U.S. economy?
I suspect that rates will rise a little bit more slowly than many people anticipate at this point, but it does seem like we've come to a major inflection point. And from that standpoint, I do think that with growth rates as slow as they've been, that limits the potential for growth within the economy, and it may not take a great deal of rise in rates to begin to dampen economic activity. Already, I think you're seeing some signs of that within the housing markets. Certainly any big-ticket purchases where the rates rise markedly, I think it would make a bigger difference. Now, having said that, again, on a global basis, part of the question, I think, with respect to rates reflect the overall balance of money that's available for lending. To some extent, I think we may have underestimated how much that stems from the global baby boom and the fact that so many people were saving money, putting money aside to try to fund their retirement years or when they would no longer be able to work. When you look at the aging of the baby boom demographic, at least with respect to the U.S., we're approaching the time when the middle of that baby boom bulge will be turning 65. And I think the more that the global baby boomers enter retirement, quit working, the more they're going to draw down that asset pool, and the more likely it is that you're going to get more sustainable longer-term hikes in interest rates. So I think part of it reflects our policy and how fast the economic growth is. I think over the course of the next year or so, growth is probably going to remain a little bit more anemic than investors are thinking at this point. And so from that standpoint, rates may not go up quickly. But we're also, on the other side of it, seeing some signs of increasing inflation. And to the extent that that begins to pick up, particularly if we're approaching full employment levels, you could see markedly higher rates. And again, I don't think it would take as much in this weaker economy to dampen overall economic activity.
Right. And your point about the baby boomers is very interesting. I had never heard that. I had never thought about that. That's very interesting.
Virtually every country around the world has a baby boom bulge. Industrialized country has a baby boom bulge the way the United States does. So it's a big factor.
Thank you so much. This has been very, very interesting.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.